Hey guys, how are we all doing? So this is Dan from Trading in Dan, and today we're going to do something a little bit different to our usual Bitcoin analysis, and we're going to have a look at silver. Silver and gold have obviously been making some pretty big moves down recently. Silver more so than gold. Silver, if you want to look at it from a crypto perspective, silver is sort of like the altcoin to gold. It has like a higher beta, so sometimes it'll move up more than gold will, and then when it go down, will move down more than gold will. Obviously at the moment, gold's probably been moving up more, which is reflected in the gold to silver ratio that has been going up. So I personally periodically buy physical silver. So 1 ounce silver coins, or the 100 gram silver bars, or scrap jewelry as well, whenever I can get that at a good enough price. So I've been accumulating silver for over a year now. So thought it was something we could have a talk about. So I just had a quick Google of should I buy silver or buy silver, to see what articles came up, and pretty much the first ones that came up were the three that we're just going to have a look through now. So the first one is basically it's more on the actual SLV. So this is the is a paper traded contract derivative of the underlying value of silver. Even though we do have a sort of a tail wagging the dog scenario with these COMEX contracts and ETFs, with actually the paper price driving the actual underlying asset price, which is an interesting scenario. So this first one is a more technical one, because it is just based on the asset price. So if we want to have a quick read through, it's been a volatile week since the great financial crisis for the markets, and those hiding out in SLV certainly have not been spared. The metal is now down 13% year to date, despite being positive. Despite a positive year-to-date return in gold, and the metal that is currently trading below its key 20-month moving average. Unfortunately, despite this development, we still don't have any significant amount of fear in the bull camp for silver, which an even divide between bull and bears for sentiment as of Wednesday's close. This suggests we could see further on the downside before this is over, as panic like this usually ends in capitulation, not the relatively subdued amount of fear we currently see. Based on this, I see no reason to rush in and buy the dip here, and I continue to favour gold as the stronger of the two metals. So I won't read through the rest, but you can basically get the gist of his opinion. But what I will say is, this guy is talking about the traded contract, which is he's talking about the SLV. But yeah, so that is the paper traded contract. He's not actually talking about the actual physical asset, the actual physical silver. So we're going to go over to the next one. So silver has almost never been this cheap, but should you buy? With silver 100 times cheaper than gold, the silver price ratio is close to an all-time high. The obvious trade is to sell gold and buy silver, says Dominic Frisby, but is that a wise move? So a friend of mine sent me a screenshot on his phone earlier this week, and it showed the gold price at $1,666 an ounce, and silver at $16.66 an ounce. So in other words, the 1 ounce of gold is 100 times the price of an ounce of silver. Or to use the correct terminology, the gold-silver ratio gone above 100, which is almost unheard of. According to my data, the gold-silver ratio has only ever gone above 100 once before. It didn't happen in the financial crisis of 2008, the dot-com crash of 2000, or the long-term capital management fund crisis of 1998. It happened in 1991, though. Silver was $3.50 an ounce, and at the time, gold was, of course, $350. It was actually closer to 370, so the ratio touched 105, which actually is where the ratio has got to now for us, 105, maybe even more now. So apart from in 1991, the ratio has never been as high as it was on Monday. Not for once in its history, it's one of the extraordinary extremes that the global pandemic panic has caused. The obvious trade here is to sell gold and buy silver, but on the basis of ratios alone, you should also be selling gold and buying oil, buying base metals, buying stocks, buying just about anything. So what they're saying is, obviously the ratio the price of gold to basically all assets at the moment is very high, because obviously all assets are selling off. Even gold is selling off, but not as hard as other assets. So to be clear, now is not the time to be selling gold, particularly with the fiscal stimulus that is coming. So what I will say on this is, so if you have gold, I wouldn't necessarily be selling that gold to then go and buy other assets. But if you don't have gold and you were wanting to maybe accumulate some gold, it might make sense to then actually buy silver instead, whilst the ratio is this high, hoping for the ratio to come down to maybe around 50, 60 or even 70, at which point you could then convert the silver that you bought instead of gold to basically more gold that you could buy at the current price. So if that makes sense to you guys. So gold silver ratio of 15 is but a distant memory. The gold silver ratio is an odd one. Really, it should be somewhere between around 15. Silver is only 15 times as abundant as gold. There is a 15 times more silver in the Earth's crust as there is gold. And historically, the relative price of these two ranged between 15 and 20. Until 1875, the USA was a bimetallic standard, so obviously it was both silver and gold standard, both used as money. In other words, the exchange rate between the metals was 15 more or less. What I will say about the ratio of silver actually in the Earth's surface, funnily enough, there is actually more mined, quite a lot more mined gold. So that gold that is actually in bullion form above the Earth's surface than there is actually mined silver. So gold is actually more abundant in bullion form than silver. There is a lot less silver, and silver obviously gets used in industry more than gold does, partly because also it is cheaper than gold. Gold is great for industrial use, but obviously it is expensive. But the thing is, but that being said, obviously with there being more silver in the Earth's surface, the limit of the price of silver is obviously capped, because the higher it did go, the more economically viable it would come to mine some more of that silver through various methods of mining. And even say for example, the price of silver got to over $100 an ounce, say like 125 I think roughly, it actually becomes economically viable to extract silver from the sea water, so from the sea. So literally you can get like a sort of plant machinery. I'm not an expert on this, but I do know this is the case, what I'm telling you. And then you can use the seawater to then go into the machine, and then it will extract silver from that. Silver did used to obviously be a currency. It was ancient China used to trade, basically used to only accept payments of silver. Obviously we all know about the silver coins the Spanish used, and but yeah, now silver isn't actually a currency sort of metal like gold is. So there is obviously a big difference there. So whilst gold is, well, some people assume gold is a currency, but gold is a commodity, but gold is a currency. Silver is actually a commodity, and silver and gold is actually a currency. But another interesting aspect of silver is that if we are having an economic slowdown, a lot of silver is produced as byproduct for base metal mines, especially like say copper mines, for example, and they just dump that silver on the open market because they don't actually want it. They're copper miners, so they do obviously take the money from that. So if we're having a global slowdown, and obviously base metal prices are going down, that means they will likely be mine shut down, so then there'll be less of this extra silver that's coming from these base metal mines, that's then been sold onto the market. So yes, however, in the 20th century, as we all know, the countries abandoned their ties to both gold and silver, so money and the metal went their separate ways. The ratio of 15 has become an ever more distant memory. It did briefly hit 15 in 1981 as the Hunt brothers tried to corner the silver market, but this was an extraordinary situation. It wasn't typical. The typical broader trend is that silver is losing its value relative to gold. This is an interesting case study if you guys look into that. The Hunt brothers, billionaires, tried to mess about with the markets and basically got their ass handed to them by the powers that be. So they weren't allowed to do what they basically were wanting to do. They what they did was they increased, basically the Hunt brothers were amassing a massive silver position, maybe in the COMEX, and so what they did was to basically collapse their system, and lots of other people obviously buying in on the back of this trade. They massively increased basically the margin ratios of how much margin you had to post per silver contract you were trading. So that obviously caused instant margin calls where people then had to liquidate the silver position because they couldn't afford to be holding such a large position. So say like with Bitcoin, if you're trading like say 10x and all of a sudden the most you're allowed to trade is 2x, if you're like trading your account like balls to the wall, pedal to the metal, like trading at 10x, then obviously you can no longer do that anymore unless you post more capital. So you will then have to reduce your position size, sell basically 90% of your position, and then obviously that's gonna force the price down. So that is what happened. That's what happened to the Hunt brothers. So one day we'll get back to 15, say most diehard silver bugs. This was something I was convinced in the ardent silver fanatic days of my investment use. I'm not so convinced today. Hopefully this isn't me in my investment use buying silver, but I don't think it's going back to 15. I mean, I've been buying it when we've been basically nearly 90 and obviously over 100. So my aim is obviously for it to get down to about 50 and then convert it to gold. In fact, you could go one stage further. The gold to silver ratio should be lower than 15. Silver gets used and gold does not. All of the gold that has ever been mined pretty much still exists somewhere, but silver, with its numerous industrial applications, gets consumed. The ratio between the two should be closer to 10, and yet here we are with a ratio 10 times higher than 10. So silver is 10 times too cheap, but that's just a hypothetical argument. The sad fact for silver bugs is that since silver no longer has any official monetary use, its relative value has plummeted. Some blame the shenanigans on the futures exchange with the low price of silver. I blame the evolution of money. Personally, I think both of these are actually at play. The banks do have a massive silver short position that they potentially don't have the actual physical silver to back. So that is an interesting one. Is the world going back to some sort of metallic standard as a result of the world pandemic? I doubt it. Money is going to get more and more digital. Metal is too physical, but I can see one scenario where it might. Get ready for the epic debasement. So authorities' reaction to the crisis will be to debase the currency, slashing rates. We got a dose of that from the Bank of England just this morning, so that'll be whenever this was released. But obviously we've had it in abundance from the Fed on Sunday evening. So bailouts and money printing, which will be given a new name. That is even more obfuscatory. So basically trying to hide what it actually is than quantitative easing, even though it will be quantitative easing. Infrastructure spending. I believe the Chancellor is going to announce in his budget later today. Gold bugs have long been waiting for the loss of faith moment where the faith in fiat money will be lost. Might all the monetary manipulation that is already in place be the long awaited for trigger? The ensuing loss in the faith sees us going back to metal. It is possible, I suppose, but I think that's too long in the tooth to see that one really happening. The problem with this is if you are a massive gold or silver holder and the financial systems collapses and then so we go back to some sort of metal standard or the metal becomes ridiculously expensive. The government will change the laws, change the rules. It will come after basically your gold. You will be either massively taxed on it, have it straight confiscated from you. So that's a difficult one. really, to think that you're then going to be one of the richest people in the world because you've got a load of silver or gold and other people didn't, and we changed that system. It's like a lot with the Bitcoin hodlers. Like, you'll have some big wallets with a lot of Bitcoin and they think Bitcoin's going to be the new world reserve currency, and then what's that going to make them? That's going to make them the richest people in the world. And is that going to happen? Or are you going to get your Bitcoin taken off you and distributed? I mean, even something as simple as the guy that in America that bought all the 17,000 hand sanitizers to try and sell on Amazon for a profit, because obviously America used to be a capitalist society, but obviously now apparently it's not anymore. So he then, obviously the government basically came in, took it off him pretty much. So I mean, that's what will happen if Bitcoin becomes a world reserve currency, or gold or silver does. If you own a lot of it, you're not just going to become the new Rockefeller or JP Morgan or whoever is the richest guys in the world. You will basically have it taken off you. So anyway, I own some silver. I love silver. I don't think it's a bad thing to hold this in the time of crisis. If it wasn't so precious, it would have been dragged down a lot more, like the energy and base metals. It's certainly cheap, but there are a lot of other things that are cheap at the moment. So yeah, the gold silver ratio hit a low of 30 in 2011 when silver touched $50. It has been an uptrend ever since. So that is the uptrend of the ratio, so from 30 to where it is over 100 now, not the uptrend in the price of silver from $50, because that's clearly not the case. Plenty of us, me included, have tried to call the top of the ratio, and it has kept grinding higher. The likelihood is that it will pull back from the extremes, perhaps even as far as the 80s, but in reality, the reality of our modern fiat age is that as far as the gold-silver ratio is concerned, it will take a fairly extreme change in circumstances for us even to get back to 50. 50 is the new 15. So sell gold and buy silver as a trade by all means, but make sure you reverse the trade at, or at least start moving up the stops if we ever get back to the 80s, 70s or 60s ratio. Not in time, obviously. Not want to go back in time to the 80s. That'd be great, wouldn't it? So here is one last article that I just wanted to show, just as an interesting point. Be wary of gold and silver coin sellers taking advantage of the global pandemic. So basically, the gist of this: precious metal silvers never want to let a good crisis go to waste. Blur. So they're charging more than the coins are worth, more than the metal value. But what I would like to say is that I see it all the time, like the actual mint here in England, selling like a commemorative coin, like a gold or a silver coin, and they'll literally be charging often double, sometimes even triple the actual underlying metal value. So it's ironic that they will be saying don't be wary of this, when it's literally the actual mint, the treasury, the governments themselves that are basically trying to rip everybody off by them minting a coin, because they obviously own the mint, and they're able to do that. A apparently rare commemorative coin, which is basically just a way of them ripping you off for the actual underlying metal values. So interesting fact there for you. Another interesting fact that at the moment, while silver is going down, you can't actually buy it at these low prices. It's actually running out in a lot of bullion dealers. Apparently the US Treasury, they've run out of their eagles, their silver eagle coins, because they're not actually, people aren't able to actually buy the physical silver at what is a very low spot price, which again is showing an actual detachment of the underlying the actual real silver price and the derivatives market, which just shows that there is issues. Basically, if nothing else, you can read from that there are problems with it. So, and then one final thing I wanted to say, so the GLD and SLV are basically backed, they're basically, the custodian for those is HSBC Bank. HSBC Bank, along with lots of other banks, could potentially be in a lot of trouble. So I'm not too sure what is going to happen to people and their GLD positions when HSBC, the custodian, if they go bust. They're obviously heavily exposed to real estate in China, which I just can't see the bull case for at the moment. So anyway, hopefully that was useful for you guys. Remember, it's not a financial advice. I'm not a financial advisor. I'll have another Bitcoin video coming for you guys soon. And yeah, thanks for listening, guys.